everything we talk about is for educational purposes only. We haven't taken your account or your accounts into consideration. We're just providing general financial planning guidance, not advice.
Does the current financial situation in your country worry you and its impact it will have on your finance and investments? Stay tuned to learn more in this episode of KEAL, how we can navigate these waters. In this episode of KEAL, I have the pleasure of speaking with Amar Shah. And Amar, in this episode, I really want to touch on a sentiment a lot of people are feeling, not just in the United States, but worldwide, about how their economic situation's deeply being impacted based on what's going on, especially on the macro level, and how it filters into the day-to-day people's lives, the micro situation, their businesses. And when I see headlines like Australia from The Guardian, inflation's back in the news, so should Australians be worried? China, record number September factory prices add to rising risk of stagflation. Here in Mexico, 6% September inflation. Sydney, inflation pressures, reminder, interest rates will rise eventually. On and on and on. I mean, in the United States, it's also going up, as we know. My question to you is, should people be really concerned about their finances overall and where this whole situation with the economies worldwide is going, in your opinion?
I think what we've learned from COVID specifically is that the governments just opened up their checkbooks and started printing money, right? And that's what's caused some of this inflation. In the US, it was said to be transitory, which, we all know now it's not transitory. I think when we look at this, that we all have personal responsibility of our own finances, and the easiest way to get ahead in your own finances is to just start. No matter where you are, no matter where you want to be, you have to take the first step, and then that's to start. And identifying what's important to you, right? So when we say start, what do we mean by start? Well, what we mean is to just take the first step to identifying what's important to you, and then you can create a plan to go from there to achieving financial success.
Mario, you're making a really important point that obviously we need to consider our own accounts for ourselves, our own financial situation for ourselves, do our due diligence to track our own budgeting and saving and everything else. It all starts with us no matter what. Besides that, like what's some just general tips that you would say to people, like especially when they take into mind when they go to the grocery store, or when it comes to investing or whatever it may be, just so they don't get overly panicked by shortage of, let's say, supplies, like out there in LA with all the ships out there and how that affects what's in the stores. So to avoid the panic situation, how would you, just from your perspective, give people ease of mind and general tips of what to do?
Yeah, from an investment standpoint, most of your investments you're not going to use for the next 5 to 10 years, right? These are long-term investments. So, getting started with investments, there's no perfect time, and it's kind of what we say. And we want to start by using dollar cost averaging. Nobody knows if we're at a market peak or market low. And by dollar cost averaging, we can even out some of the ups and downs. The markets generally are efficient, right? But we've seen periods of time when the markets are inefficient. And so what I mean by that, we saw a flash crash. When things go down, people tend to panic, they panic sell. And so there are also opportunities along the path where you can take advantage of mispricing in the markets, right? And maybe if you're dollar cost averaging, you add a little bit more in during those downswings to take advantage of that. In terms of asking about groceries, and I'm not an expert in that. I mean, I think supply chain is going to continue to be an issue. This is not just a one and done thing. If you look back, a lot of the supply chains are run on very thin margins, and so they're extremely efficient, right? They're running at like 95% capacity. And then you add this huge load of a buying spree from people in the US or wherever globally, and consumption shoots up. There's only little wiggle room that these companies have had. And so this is unprecedented time for supply chain. It may talk to a little bit more of how do we solve these communication issues between shippers, ports, truck drivers, warehouses. How can we streamline that even better? And I think that, this will take time to solve. It's not going to solve right away.
Yeah, the supply issues, and especially with, I imagine it almost like a train on the railroad tracks, like a freight train going by, and all of a sudden it has to brake suddenly, but you're going to get all those back carts smushing together, because that seems to be how generally the world economy works. It's just make, buy, sell, trade. Everything moves quickly, right? Because we expect everything in our shops at all times, right?
Yeah.
Like this. And now that it's not like that, it has a tremendous impact on the whole economy as a whole, right? Pricing and what's available to you, everything else.
And I would even say quality control becomes an issue, right? So I'll give you an example. My mom needed a new refrigerator, and during this pandemic, buying any appliances has been very difficult. And so we finally got our mind made up on one of these refrigerators. We order it. It takes 3.5 weeks to get here. It gets here, it's damaged. So it has to be returned. We have to wait another 3.5 weeks to get a new one. And that one, the water line was clogged. The water dispenser on the refrigerator wasn't working. So, one, we have supply chain issues, but now we're entering some quality control issues because everybody's forced to output as much as they can. And, I hope that the checks and balances around that are happening,
That's a very interesting insight that I haven't really heard in general with everything going on now, because
and it could be, it could also be just, I'm one observer, right? I could just have had bad luck. But
it makes sense, because also people, like, when I hear these stories like, okay, well, all the toys won't be available for Christmas now, so you better start looking and buying now, and if people have that idea in their mind, then they're going to be, some creative guy somewhere is going to say, well, I'll just make my own dolls and then say it's the Barbie, whatever it is, and sell it. And then the quality control goes way down because it's some sort of knockoff, right? Who knows? But the point is, it's like, okay, well, you want this product, right? But you can't get it because of what's going on. So just take what you can get. And that's not good either.
Yes. So that's an important point to make, is that you have to make sure you're doing your due diligence for the products that you're getting, right? Because in any market cycle, there's people that try to take advantage of other people. And I think there's probably more pressure now because the demand is so high and then the inventory is low, right? So
absolutely
more opportunity for that to happen.
For that, exactly. And Amar, just in case people aren't so familiar with investing in finances, could you just explain to them what dollar cost averaging is, just that term itself?
Yeah, so if you look at an investment can either go up, it could go sideways, or it can go down, right? Those are the only three possible module outcomes, right? And so if we invested, let's say you have $1,000 and you invest all $1,000 all at once, if the market goes up, you're extremely happy. If the market goes sideways, you're not unhappy. You probably earned a couple of dividends along the way. But if the market goes down, you're probably unhappy, right? If you dollar cost average, you take the $1,000 and you say, all right, I'm going to buy in 4 increments over a period of time, $250 each quarter, let's just say. Then at the end of the year, if the market goes up, your money probably went up as well because of the initial 2 investments, right? The initial investment and the subsequent investment. So you probably made some money there. Not as much as if you invested all at once, but you made some money. the market goes sideways, then you probably bought on some of those dips. And so you probably made a little bit more money than you would have if you would have done a lump sum all at once. But if the market goes down, your investment probably went down as well, but it probably didn't go down as much. And so if you do dollar cost averaging, and most people that are saving into retirement accounts, you're doing exactly that, because it's coming out of your paycheck and it's coming out, bi-weekly, and you're buying just a little bit. And over time, you have this large dollar amount at the end of, your working years. So dollar cost averaging is a way to kind of mitigate some of the unexpected risk with the markets, right?
Right. And is this like you're continually having that money coming out of your account despite what's going on in the world, and then you wake up 20 years later and then you see where you're at?
Wow, look how much I've saved. Yeah, exactly.
Bringing up what is going on worldwide right now and supply chain issues and how that's affecting pricing a lot of products, et cetera, and causing a lot of panic with people, however they take it, one way or the other, whatever their relative size of panic is, and I'm not going to ask you this question as it relates to advice necessarily, but maybe just a general premise of your opinion is that people are like, oh, well, the dollar's going this way, this currency is going this way. My safe bet, from what I'm hearing from so-and-so, is just to buy Bitcoin, right? Or this cryptocurrency, right? I mean, I have no idea personally if that's good or not good. I don't have an opinion per se on it. I don't know. But I mean, are people having good, let's say, intuition, for lack of a better expression, of saying, okay, yeah, I should buy cryptocurrency because it'll hedge against what's going on with the dollar and everything else?
Yeah, I mean, I don't really know. When we look at, maybe we look at what's driving crypto, and I guess what's driving crypto is that there's a lot of people out there that feel that these banks have taken advantage of them, or the central banks have taken advantage of them by printing all this money in deflating currencies, right? Fiat currencies around the world. And so what crypto allows you to do is a limited supply, right, of crypto. And I think with Bitcoin, there's a certain amount of coins that are created every year, but it's very limited. That you have something that has limited supply and that can have a store of value, right? I don't really know if this is going to work out, Bitcoin. I don't know. I mean, we don't invest in, full disclosure, we don't have any Bitcoin in our funds or anything like that. But I will say that it's also a generational thing, right? So my parents grew up knowing that if you have gold, that's a good store of value. My children have grown up playing video games, and it's all built around digital currencies, right? And then that's what they feel is a store of value, right? The future will tell, but I believe that when we look at these things, there hasn't been a lot of history around Bitcoin, right? And when you look at relative to gold as a store of value. And so I don't know what the future entails with Bitcoin or cryptocurrencies. People that have gotten into it have made a lot of money. People that have followed the craze have lost a lot of money. And so it's a volatile security. So I just look at it as any other investment where it goes up and down. And you got to follow the flows. You got to follow the momentum in some of these things. But yeah, I guess that's a rambling way of saying I don't know.
Right. Yeah. I mean, but you're speaking to our audience in a way to really think through it, which is important because there's so many variables that don't give such a definitive answer on that you should consider. Like, everyone, when it comes to your own money, you got to do, like you were saying before, do your own due diligence, do your own research, and figure out what's right for you, right? I mean, at the end of the day, that's what it comes down to, no?
Yeah.
Mar, it's been so incredibly insightful speaking with you on this episode and just giving people, especially, a really good kind of snap insight on ways of thinking about what's going on in the world and how that could affect their economic situation. kind of to the point. So I really do appreciate you speaking to our audience about these very important, items going on right now in the world, especially relates to economics and finance and personal, management of their own money. And just to conclude, Mark, can you just speak to our audience, especially the younger audience, and let them know and give insight into what are some good practical steps that they could set out on to when it comes to their money investing, and kind of be like a good compass, a good way of going forward without having to worry too much?
Yeah, that's a good question. And, everybody's situation is different, right? But I think everybody should, first start with their values, right? Identify what's important to them. And starting with values is so important because if you have a set of values, you can identify goals based off of your values, right? What's important to you. And then you can track your behavior to make sure you're in alignment with those goals and values. And how we track behavior in the finance world is really just spending, right? Like if you say that traveling is important to you, right? And your goal is to travel to some city or some country, but when you look at your behavior and you're spending it on, eating out, movies, renting or leasing cars, etc., you can see there's a misalignment, right? So first identifying what's important to you, so you can create goals that are really aligned with your values. And from a financial planning standpoint, you want to make sure that you have a cash reserve, right? Emergency fund. You never want to be in a position where you're going to have to dip into credit cards and stuff like that, and then you have to dig out of a bigger hole in terms of debt. And so we tend to look at making sure that you have your safety net set up first, right? And then once you have your safety net, you have an ability to save, and you need to look at making sure you protect your ability to save, right? So that's like insurances in the world. Typically it's like term insurance or disability insurance to protect your ability to earn income. And then from there it's investments, right? So setting up investment accounts, making sure you take advantage of employer plans that have some sort of matching, right? In the US, that's a big piece of savings is through defined contribution plans like a 401k, 403b, or any qualified plan that has some sort of matching, right? Typically 403bs won't have matching, so I guess that's a bad example. So, and then once you start saving, you just need time, right? A big component of this is time, right? So when you have time, you have market cycles, you have ups and downs, and as you continue to save, you can keep track of where you're at. And I think that is the key, is to just start by identifying what's important, create a safety net so that you can protect what's important, and then investing and then giving it time.
That's excellent. Very good, very practical insights, and also just very good best practices, best habits, just to really, really, be patient, let things grow, and then have the right safety nets and apparatus around you to be able to keep you, especially with insurance as well. That's a great point, because, people often overlook, okay, if I marry someone and something happens to me, do I leave them anything, et cetera, and disability and everything else. So really good insights. And Amar, where can our viewing audience find out more about you, your work, connect with you if they want to seek out your, more personally, financial situation? Where can they?
Yeah, so we have a YouTube channel. It's called Client First Capital Learning. And if you go on there, we post videos. We try to post videos at least once a week. We haven't been the most consistent with that, but you can find videos if you message us through there. If you have questions, then we can create a video that's targeted to any questions that you may have. But on our YouTube channel, there's also a contact us page, etc. You can find us through there. Our website is www.clientfirstcap.com. But the first place I would start is the YouTube channel.
Excellent. So everyone go check out Amar's channel, connect with him, leave comments. He's extremely intelligent man. Give him, ask him what sort of content around finance, investing that you would want to know in more detail. He can certainly, when he has a good opportunity, make good content around that. So thank you so much, Amar. It was a pleasure to have you on this episode, and we thank you very much.
Yeah, absolutely.
We'll see you all in the next episode. Take care, everyone.